This is our Forex blog for April 11th, 2014, and we're busily working on changing over Visual Basic trading signals into C++, which is much more powerful. I'm going to do a quick blog on how to use our currency indexes to find the strongest currencies to buy and the weakest ones to sell, but I'll just quickly show you the status and the update of how well our signals are doing. You can see the previous day we found two nice buys right here, found the high sell, we had one loss here, and then on Friday did pretty good picking up this little pullback at the swing area, sold here for a big win. I have a lot of different W pattern signals in here, and it also found the high up here at the whole number, and this is a reversal sign based on the range bar patterns in our statistics. Here is the pound for yesterday. Did a really good job picking up this nice little sell here out of this narrow range breakout. We had a failure right here. So we have a loss, win, win, win. Small win, probably a loss or a small win. Break even pretty much, and then a nice win here. Now, until our signals come out, which the first version is going to be out probably in a week to 10 days, I will then, keep updating it over the upcoming months. But keep in mind, I translated about 15,000 lines Visual Basic code into C++, which I did not even understand how to code 3 weeks ago. So the progress has been outstanding. I thought it would take 3 or 4 months to get the first version out, and it looks to be about a month. So we're about 300% ahead of what I estimated the schedule. So until that comes out again in a week to 10 days, you can use these currency indexes. They're quite easy. You basically want to find a strong currency to buy and a weak one to sell. It's that simple. So let's scroll back and look at, earlier in the day, you can see the euro was strong, the dollar is strong, so you want to avoid those two. The yen has broken down and it's weak, but it's also underneath the lower containment band. So, when currencies are weak, they're likely to go down, but when they've gone down too far, there's not much more room for it to go. It's more likely to reverse and continue going down. So let's try to find some high probability trades. Typically when a currency goes from above to below its hourly moving average, you're going to get some movement, or from below to above you will too. You can see the pound, when it broke its hourly right here, it came back up and tested it. This is a pretty decent place to be selling the pound, and you want to sell it versus a currency that's strong. The dollar's strong. You can see an explosive move up. If you draw your fibs on that last big move, you can see it's right around 38 to 50% fib. It's also sitting right near its hourly moving average. It's very likely, at that time to get a sell in the pound dollar. Now, here's our pound dollar range chart, which also happened to be looking for sells, but at 4:30 you're looking to be selling this. Here's 4:30, so you can see kind of a trend line break right around that time. It's very hard to have a computer programmatically draw trend lines and draw trend lines accurately. It's pretty easy to have a trend line created, but a human can really draw them much better, especially professional traders. So here's where you get short, you put your stop above the high, and the key to trading is small losses, bigger wins, and you can see this is just an absolute grand slam, super home run. You got 10, 20, 30, 40 to 50 pips on this, depending on where you got out, while risking only 10 pips. And our signal caught this because I have methods in there that look for the last low over the last 20 or 30 bars, and if the short-term low goes underneath that, many of my bar pattern reversals go into effect. That's how I caught that particular trade. I made a slightly lower low, and it was not able to bounce back into the range, and so we sold it. But a professional trader would have pretty much got the same entry, maybe a few pips earlier right here, but you would have to sit through this, wiggle room. That's one perfect example of using a currency index to find a good trade. Another currency that was strong, you can see, is the euro. So you can, when the pound became weak, look for euro pound buys around that 4:30 or 5 o'clock time. And you can see the exact, sometimes they actually occur quite a bit later. Here's the high. If at 4:30 you're looking to buy this, you might have bought this little breakout here, got in a little bit earlier with a tiny, super tight risk. And you can see this one, exploded up very nicely. You're rarely ever going to catch every pip, but even if you got out in this range right here, you can see your win was 2.5 to 3.5 times bigger than what your risk is. And that's the key to trading. So until our signals come out, and again, the first version will be out in 7-10 days. It's the first version. It's going to have, I'm not going to put the alerts in there, that's going to come later. And the reason for that is, by the time you get an alert and you get back to your computer, some of our best trades are going to be 5 to 10 pips in that direction, if you're not there at your computer within 20 seconds. A lot of these trades are designed to move fast pretty quickly. Not all of them, some of them, but you're more bound with an alert to catch more losers than the winning ones, because the losers are going to be sitting there going sideways, whereas the good trades are going to be exploding. So if you're not sitting there in front of your computer when these go off, and especially cell phone and email alerts, I don't have any plans of putting those in for months and months, because they're pretty much worthless. So there's no point of putting something in that really is not going to benefit people. I know everyone wants alerts, but they have very limited benefit. If you're not sitting right there when you see one of these patterns, and audio alerts, will help you spot it when, if you're sitting there reading the news, sitting, right there at your computer, they have some benefit. But it's not going to be in my first version. There's just too much to do. Translating 15,000 lines from one language to another is a huge, monumental task. And I've actually rewritten these signals from the ground floor up, learning from the mistakes over the last year.